Is Halifax real estate due for a crash? You've probably seen headlines about corrections in big Canadian markets, usually Toronto or Vancouver, but here's the thing. Halifax does not operate the same way as those cities. So today, I want to break down why a major correction here is unlikely and what that means for buyers and sellers locally. Welcome back to my channel. If you are new here, my name is Greg Pierce. I'm a local real estate agent and investor on the east coast of Canada, servicing the Halifax area of Nova Scotia. And if you're thinking about buying, selling, investing, or just want to learn about the real estate market, please click on the Calendly link below in my description, and I'd be happy to book a one-on-one call, or if you're local, meet up at your local favorite coffee shop. All right, let's dive in with it with point number one, and that is population growth. So let's start there. Halifax has been on the map for the past few years in a big way. We're seeing record immigration into Nova Scotia, and at the same time, a lot of Canadians from Ontario and other Canadian provinces are choosing Halifax as a more affordable place to live. Fact check, Nova Scotia's population hit over 1.07 million in 2024, which was the fastest growth rate in all of Atlantic Canada, and that was mostly fueled by immigration and interprovincial migration, and that stat's supported by Statistics Canada. If you really think about it, during COVID, a lot of people discovered they could work remotely, and moving here meant they could get more house for less money and a slower pace of life while still enjoying that urban lifestyle. That momentum hasn't stopped, however, it has slowed somewhat. Fact check, remote work boosted Nova Scotia's interprovincial migration, and in 2021 and 2022, Nova Scotia had its highest net interprovincial migration since the 1980s. That quote is coming directly from the Nova Scotia Finance and Treasury Board, so you know that's legit. Point number two is our job security and the economy. Another key factor when you're looking at the real estate market is absolutely going to be the job market. Halifax is not built on one single industry that could collapse overnight, meaning a following real estate collapse. Instead, we've got things like the shipbuilding contract, which is bringing in steady work, plus multiple universities, hospitals, and a large government sector. Fact check. The federal government's shipbuilding program is worth more than $60 billion and supports thousands of jobs in Halifax through the Irving Shipbuilding Program. That's directly from the government of Canada. Those industries create stable, long-term employment, which means fewer people are forced to sell during downturns. Fact check. Healthcare and public administration together employ over 30% of Nova Scotia's workforce. Both are highly stable sectors, and this is exactly what an economy and a real estate market needs. That is supported by Statistics Canada. Point number three, housing supply. Now, Halifax simply does not have enough housing to keep up with the people moving here. Immigration has slowed down, but even with new subdivisions going up across Halifax Regional Municipality, it's just not catching up fast enough. Combine that with one of the lowest rental vacancy rates in the country, and you can see why housing here is still super competitive. Fact check. CMHC estimates that Nova Scotia needs an additional 70,000 homes by 2030 to restore affordability, and current construction rates just simply aren't enough. And that quote comes directly from CMHC report in 2023. Point number four, prices and affordability. Prices cooled following the peak in 2022, but Halifax has since surpassed those highs set in 2022 and is still one of the most affordable major cities in Canada. That price gap attracts buyers, both locals moving up and people relocating from more expensive parts of the country. Fact check. Halifax was one of the top destinations for Ontario out migrants in 2022 and 2023, and that's according to Statistics Canada. Now, point number five, market sentiment and balance. Finally, let's talk about the sentiment of the market. Yes, buyers have become more cautious with interest rates, and that slowed down bidding wars compared to 2021 and 2022, but we're still not seeing panic selling. Inventory is rising slowly, but not enough to put real pressure on prices. Fact check. Halifax's month of inventory is hovering between 2 to 3 months in 2025, and that is still well below the 5 to 6 months that define a balanced market, according to the Nova Scotia Association of Realtors. So, the reality is, instead of a crash, what we're seeing is more of a balanced market. This is good for all parties involved, including realtors. Homes may sit a little bit longer, but buyers have more choice, and sellers are still able to get strong prices if the property is well marketed and priced right. So, the big question remains, will Halifax see the kind of crash or correction that the media talks about in other markets? The evidence supports all reasons pointing to no. However, prices may adjust here and there, but the fundamentals, including population growth, stable jobs, low supply, and relative affordability compared to the rest of the country, all point to Halifax being on solid ground. And if you're thinking about making a move, the biggest mistake right now would be to sit on the sidelines waiting for a crash that won't come. I've had many clients waiting for that same crash so they can get in at a discount, and it just hasn't happened. So if you're curious about how this impacts your plans to buy, sell, or invest, please reach out. I'd be happy to walk you through the numbers for your situation. Thank you so much for watching, and as always, I'll see you on the next one.